Yes, students. Now we will revise chapter 13, which talks about standard costing. Many of the students find it difficult because of the formula, but we will try to make it easy. We will try to analyze the logic behind each of the formula, guys. So there are three different types of variances we need to calculate in this chapter. That is material, labor, and overhead. Under overhead, there are two subcategories. That is variable overhead variance and fixed overhead variances. Okay. But before we start with the variance calculation, first we'll understand, sir, what is the logic behind or what is the concept behind this chapter. Guys, whatever we will learn in this chapter, the standard costing, the concept behind this is nothing but the cost control. Cost control. See, in the first chapter, we learned about cost control. Sir, what is that? We will follow different steps in order to control our cost. That is, at the beginning of the year, first we will set a standard cost, which we also call it as predetermined cost. And when we are doing the actual work, we will try to ensure that my actual cost is equal to the standard cost or much below that, if possible. Yes, sir. We will make sure that my actual cost will not cross the standard cost. If by chance, if actual cost goes above the standard cost, then there will be a difference or variance called adverse variance. And the respective department will be answerable for it. Why did you incur this additional cost? So once we get a variance, we will also analyze that variance. What is the reason behind this? So standard costing is not a method, it is a technique of controlling the cost, where we will set the target at the beginning of the year or at the beginning of the period. Okay, the period might be month, quarter, or year, guys, anything. So let us take it as a year for easy sake. At the beginning of the year, we will set a predetermined cost tax, which we call it as standard cost. And as and when we do the actual work, we will get to know what is the actual cost of our actual work done. Compare this actual cost with the standard cost. And if there is any difference or deviation, we call it as variance. If actual is less than standard, very good. We call it as favorable variance. So even the department or the workers who are engaged in this work will be rewarded for it. Whereas if actual cost goes beyond the standard cost, then we call it as adverse variance. And we will ask the respective department to explain the reason for the same. So we will analyze the variance and ask them to report for the same. So that if there is any changes which we can bring, at least we will bring it so that in the next year we can control our costs. Okay. First, guys, I will try to explain the concept with an example. Then we will go through the formulas. See, at the beginning of the year, we always set a standard which acts like a target, which just act like a target. And at the end of the year, we get to know what is the actual work done. And for that actual work, what is the actual cost we are incurred. Now, assume a company has set a standard cost of 10 lakh to complete a work. But the workers have incurred a cost of 12. So that means we have incurred 2 lakh more. What do we call it as? 2 lakh adverse. Correct? Actually is more than the standard. 2 lakh adverse. Now we will try to figure out a reason for it. Guys, this 2 lakh will be mainly because of three reasons. Either you have incurred material cost more, labor cost more, or overhead cost more. So now, for me, if I just tell 2 lakh extra, it won't be feasible. I need to tell why extra for what reason. Clear? So even this 10 lakh has to be given a breakup element wise. So when they have told 10 lakh, you have to incur the cost. How much for material? How much for labor? How much for overhead? Give me the breakup. So in this 10 lakh, they have told standard material cost should be 5 lakh, standard labor cost should be 3 lakh, and standard overhead cost. Here I'm not breaking variable and fixed. We will take it as a whole. Overhead is 2 lakh. So the total is coming to 10 lakh. Yes. This is the cost which we are supposed to incur, standard cost. Now we got to know the actual cost. Total is 12 lakh. If I break down, material is 6, labor is 3 lakh 50, and overhead is 2 lakh 50. Now compare each other. Now we are trying to find out this 2 lakh is because of what? How much because of material? How much because of labor? How much because of overhead? Okay, sir. Now, standard material cost was supposed to be 5 lakh, but actually I have incurred 6 lakh. That means 1 lakh more. So, what is the material variance? 1 lakh adverse. Means I have incurred an additional material cost of 1 lakh. Now, let me again try to figure out the reason for this. Sir, this 1 lakh extra, why, sir? Either I have used excess quantity or I have paid excess price for each kg of raw material. So now let us try to figure out that. So this I am breaking down. I was supposed to use standard quantity, 50,000 kgs of raw material in my production process. For each kg, what is the amount I was supposed to pay? 10 rupees. But actually, how much did I use? 54,545. So I have used excess. If I have used excess, obviously because of some wastage or loss in the process, yes, sir. Because of that, will I have adverse variance? Yes. Same way, I was supposed to pay 10 rupees, but I actually paid 11 rupees. This is called standard price, this is called actual price. So actually, I have paid more. That means even this will lead to an adverse variance? Yes. Hope you are understanding. First, we got 2 lakh. We 2 lakh, we tried to find out how much is because of which element. We got 1 lakh because of material. Now we are trying to figure out the reason under that also. Because of excess usage of material, because of excess payment. Okay, sir. We got. Fine. Material part done. Now let us go to labor. I was supposed to incur 3 lakhs standard labor cost, but I have incurred 350. That means there is an adverse of 50,000. Now let us try to figure out the reason. Maybe I have taken more hours to complete the job, or I have paid more rate to my workers. I was supposed to work only for 3,000 hours to complete this work, but we have worked for 2,800 hours. Good, sir. We have saved the time. Really good. Okay. So that means with respect to hours, we will get positive variance. But with respect to rate, we have paid more. We have paid more. Instead of paying 100 standard rate, we have paid actual rate 125. So here we will get adverse. So if I net adjust both, we will get overall 50,000 adverse. Clear? So when do we have adverse labor variances? Either you have used excess hours or you have paid excess to the workers. Same way we will try to figure out the reasons for this 50,000 adverse also. Under overhead there will be two breakup, variable and fixed. So we'll try to calculate. So 50,000 is because of what? Variable overhead or fixed overhead. Under that also there are various variances. Understood? Means I'm just trying to explain you why are we doing all this. Yeah, I want to know why we have incurred the excess cost or extra cost, and I'm trying to figure out the reason for it. So that at least in the upcoming period, I cannot change my past. At least in the upcoming period, I can take some necessary steps so that my cost would come down. Yes. Next important thing is see this standard data, whatever they would have given, should always be for actual should always be for actual output. Here everything I have taken plain. Let us go to the next table here. Guys, see, they have given a standard cost. Assume this is like a different case. Standard cost, they have given it as 10 lakh. In that, how much is material, labor, overhead? 5 lakh, 3 lakh, and 2 lakh. Yes, sir. But this was for 1 lakh units. Standard data was given for how many units? 1 lakh units. Now coming to the actual data. Now let me come to the actual data. Actual cost is 11 lakh. In that material, labor and overhead is 580, 320 and 2 lakh. And this is for 80,000 units. Means actual output is 80,000 units. Guys, now you guys tell me, can I compare directly this with this? No, sir. The base is not the base is not same. What base, sir? Here, whatever data is given for 1 lakh units, whereas here it is for 80,000 units. And obviously, I know that if I compare this two, we will get a difference. Why, sir? Because this is for 1 lakh and this is for 80,000. Correct. Now I cannot tell you whatever you are supposed to incur for 1 lakh, you incur for 80,000. How is it fair? Clear. Now convert the standard data for what? Actual output. Now what is actual output? 80,000 units. Convert all the standard data. Standard data should always be converted for actual output price. So 10 lakh is for 1 lakh units. How much for 80,000 units? We get 8 lakh. I have given the equation here, you can see. A is nothing but standard. Okay, A is for 1 lakh units. We need to calculate for actual output of 80,000 units. Same way, 5 lakh is for 1 lakh units. How much for 80,000 units? So you'll get 4 lakh material cost, labor cost 2 lakh 40 and overhead 160. Now can I compare this two, sir? Yes, because both are for same level of output. That is 80, 8. Now this both are comparable. Correct now guys. So please be careful normally, especially with respect to quantity and hours. While calculating material variances, quantity, and while calculating labor variances, hours, you should always convert it for actual output. I am explaining the reason. Why do we do that? Because we learn all that now. Clear? I'm explaining you, sir. Why do we convert always standard data for actual output? Because actual cost will always be for actual output. So actually you have done that. Now what should have been done is standard. So standard also should be for actual work done. Okay. Hope you understood. Now this both are comparable and we will see if there is any variance, like however we did. Clear? Yes. So here we assumed that everything was like for actual output only and I explained it. One step ahead, I went and I took you, sir, should we convert our standard data for actual output? Very simple. Let me give simple example. Now, can we compare your 10th mark sheet with CA marks? 10th, sir, all 90 plus, 95 plus, or even plus 2. Chinmay, correct? Huh? Sir, state rank holder, sir. But when it comes to CA, reality we will understand. Sir, CA we should not take so lightly how we took our plus 2 or even our 10th. It will teach you everything. Clear? Huh? Yes. It's not like you have taken lightly now, but it will teach you that you should not take lightly. Yes. Because many students, what happens? They will understand the standard of CA exams only after 1 or 2 attempts. After seriously, because they believe that, especially those who have come from degree route also. Sir, degree push model, sir, they used to push up. Clear up. Whereas in CA it is pull model. They will not pass you. In degree, whatever you write, they will pass you. Correct? In respective universities, okay, or colleges, because they want you to go out after 3 years. They don't want to keep you. New batches are coming. Whereas when it comes to CA, it is not like that. They want to keep you in the majority side. Majority side is which side? Failing, unsuccessful side. Clear? So please make sure that you will not fall under the unsuccessful category. For that, you have to be exceptionally good, guys. Clear? I know. See, most of you would be giving your best till now, but may not be 100%. May not be 100%. I tell you, see, only when you give your 100%, you get the results what you want us. Clear? Because I have seen literally students taking 6 attempts, 7 attempts, 8 attempts, or 10 attempts. See, nothing wrong in taking the attempts because TA is TA at the end of the day. But the thing is, if you just give your 100% in one attempt, you can just close the game and move forward. Clear? Instead of studying the same thing, you again and again, you also feel like, oh, all this I had studied last time also. When you open the book also, you feel like, oh, I had studied all this. Yeah, that hurts. But somewhere you would have taken something for granted. Something you would have left. Something, somewhere you would have gone to your comfort zone. Just think about it. Sir, now assume 1 or 2 months is left for the exam. If you just push yourself hard, complete it as much as possible, give your best. Sir, 12 hours, 14 hours a day you are able to study. You can study 12 to 14 hours, assuming you are not doing anything else other than CA, you can study 12 to 14 hours if you avoid all your distractions. Now, if you can give your best in this 1 or 2 months, again it will avoid studying same thing, guys. Clear? Because you again repeating for 4 months, that will not be fruitful. And over a period of time, you will also lose interest. Ayo, why to get so many times? My friends and all after already degree, they are already working, they are already earning. Please don't give up. I tell you, you will realize the importance of this qualification once you qualify. Very, very much important, guys. I tell you. See, I will give one example which is very close to me. That is my wife. Okay, she cleared her exams later, but today we both are qualified chartered accountant, and she is enjoying her qualification. Clear, and it will happen for many people. It will happen. I can see some of them even after married, they are doing it. Highly appreciable. But you guys make sure that before you get other responsibilities in your life, you clear it off because managing studies along with other responsibility, maybe your work or family or whatever it is, it's highly challenging, guys. I'm not telling it is impossible, it is highly challenging. Now you don't have anything in your life except studies. You will feel. Yeah. Just think about managing studies with other things. Will be I like more challenging for you. Yeah. See, I was just following this cricket. I'm the big cricket fan. Okay. But now we don't get time to watch. Previously, when I was in school and all, even test match ball to ball, I used to watch. Okay. But now we cannot watch because of our time constraints. I was just watching, just look at the players, how they are performing, even when they are completely injured. One person going to play only in one hand. Another person is coming with a broken or fractured leg. Okay, like this number of examples have happened. See their dedication. They know that they cannot go and perform there. They know that I can at least stop the match. I can at least stop the other person winning the match. That is their intention, correct? Now, Chris Wokes came with an intention of not hitting the ball and winning the match. He just wanted to go and stand there. Same way with Pant and all. So many people have played like this. So I know you guys also somewhere feel mentally tired, physically tired. Okay, sir, I am not able to do it. Oh, I am not able to sit for so long hours. But somewhere, guys, just try to remove that from your mind and see that can you give better. Okay, is it possible for you? Yes, I really appreciate for you guys who are attending both the revision classes now. Morning casting, evening accounts. Sir, sitting for so long hours, is it practically possible? You guys showed that. Yes, it's possible. Clear. If I ask you to sit for a regular classes and all for so long, you will tell no. But now, just before the exams, you guys are ready to sit because you will also know the importance of the classes. Clear. Sir, if it is helpful for me, I will do it. Tough. I agree. It is tough, but I can do it. Clear. So even at your home, guys, when you feel that after 8 hours or 10 hours, oh, my body is tired, let me rest. Maybe if it was during your regular study period, yes, I would have suggested take rest. But just before the exam, try to push as much as possible. Try to push. Sir, 8 hours, try to make it 9 hours. 9 hours, try to make it 10 hours. 10 hours, make it 11 hours. So how much ever is possible? Because guys, assume just half an hour or 1 hour extra in a day can bring you a lot of things in your life. Just imagine 2 marks extra you are studying every day. 2 marks into number of days. Sir, whoever is in 120, 130, 140, pass. Correct. Many people have failed just by getting 130, 140, 145, 146, 148. Passed in all the subjects but not passed. Sir, how is it possible? In CA, everything is possible. Passed individual subject but failed in results. How, sir? Aggregate. Clear. And it is very painful to accept that results during the results time and to move forward. So that is why I suggest you, see, you have that potential in yourself. Make sure that you are giving your best and whatever is possible, try to cover entire syllabus, guys. Solve good number of questions, then we will see why you cannot pass. And especially costing, the more number of questions you solve, the more comfortable position you will be with respect to passing the exams. Clear? So even in this concepts, I am telling you, however, to apply the concepts in the questions. But you guys also watch the questions marathon. For each and every chapter, I have done a questions marathon, yeah, which is also available. In the regular class, I would have already covered number of questions, including the past examination questions. But now, if time permits, please do also watch the questions marathon, where you will get an idea about, sir, how to solve the question, the stepwise, how to start, how to solve, and how to end. And once you watch, try to take up some interesting question. Maybe now you are not able to solve all the questions. At least in one chapter, you will find one or two questions interesting. Take up that question. Don't look into the answer. You try solving. And while solving it, don't simply put only numbers, plus minus plus minus. Please present it as if it is an exam. Particulars, so amount, working note, everything you give guys. Because in the exam, what happens now? If you are not writing the notes, working notes now, in the exam also, like automatically you will follow that one. Or in a hurry, you will feel like our notes is not required. We will go forward. Guys, many students lose marks in that. So please ensure that you write 100% of your answers, which the evaluator would be impressed with. Don't take a chance thinking, let us see what he will do. Okay, if you take that chance, you can correct it only in the next chapter. Now you cannot go and plead the evaluator because you are nowhere aware that who is that guy or who is that girl who is evaluating your paper. So try to give that proper 100% answer in your answer sheet, and that will come only by way of practice. Sir, now I will practice roughly, sir, in the class or during preparation. In the exam, perfectly I will present, sir. Maybe your hand will not run, guys, automatically. Yeah, this will happen because now you are used to writing only numbers. There you are supposed to write notes, so particularly data ಎಲ್ಲ ಬರಿಬೇಕಲ್ಲ. There you will not feel that comfort in writing. Somewhere you feel that you are getting stuck or your hand is getting stuck. Please don't get into those problems. Okay, now let us get back to our syllabus or problems. Sure. Let me read. Standard costs are divided into three main cost components, which is nothing but elements: direct material cost, direct employee cost, and overhead cost. So we saw standard cost, they had given us the target of how much? 10 lakh. Now 10 lakh we will break down element wise. How much should be my standard material cost, standard labor cost, and standard overhead cost. Now, by comparing our actual cost with standard cost, what do we calculate, sir? Variance. If variance is positive, we call it as favorable. If variance is negative, we call it as adverse. The primary object of standard costing is to reveal the difference between actual cost and standard cost. Standard cost is nothing but how much should have been my cost. It is like a target. After standard costs have been established, the next step is to ascertain the actual cost under each element and compare them with the standard cost. The difference between them is called cost variance. If actual cost is more than, I have given it here, if actual cost is more than standard cost, then we call it as adverse variance. If actual cost is less than the standard cost, then also we will have variance, but that is favorable variance. Favorable variance will increase the profit of the organization, whereas adverse variance will bring down the profit of the organization because we have incurred more costs. Now coming to the variance calculation. So please be little attentive because all this formulas, derivation also I will tell you, very easy. Guys, while calculating any variance means you are finding out the difference. When you are finding out any difference, something minus something. Correct, something minus something. Now standard minus actual minus standard. You tell me what will come first. Standard will come first or actual will come first? ಮೊಟ್ಟೆ ಮೊದಲ ಕೋಳಿ ಮೊದಲ ಅಲ್ಲ ನಾನು ಕೇಳ್ತಾ ಇರೋದು. Will standard come first or actual come first? Standard. So in the formula always it should be standard minus actual. Clear? No need to get confused in any formula except two, which we will learn it under fixed overhead. Clear? Everywhere else it is always standard minus actual, because standard we will have it at the beginning of the year, whereas actual we will get to know only at the end of the period. Okay, sir. Now, material cost variance. Sir, we are trying to find out what is the difference between standard material cost and actual material cost. Yes. Guys, for this kind of question, whenever they ask you to calculate the material variance, labor variance, or the overhead variance, first draw a table. Even though they have asked you to calculate the variances, but draw a table. Sir, what kind of table you are talking about? Let me show you. Like this. The table which is showing you the data about the standard and actual. Clear? Normally, number of materials will be given, guys, like X, Y, Z, and all. There are different kinds of raw material used in the production process. Okay. So you will write first the standard quantity. Guys, standard quantity you can see here. Sir, they have given per unit of output 6 kg and 4 kg. And what is the actual output, sir? 1000. Always convert the standard data for actual output. Clear? So that is your first job. Whenever you are solving the question, first check whether standard quantity is for actual output. If it is already given, well and good. But most of the time they don't give it directly. You need to calculate it. Standard should always be for what? Actual output. Okay, sir. Standard rate they would have given. Standard rate is nothing but like per kg or per unit. Okay. We call it a standard rate or standard price. One and the same. Then if you multiply both, what do you get? Standard cost. This is nothing but standard cost of material. Then actual. Actual will be already directly given in the question. You need not do anything extra. Clear? So actual quantity, actual rate will be given. You calculate actual cost. Actual cost means you need to multiply both. That's all. Clear? Now, sir, what is the material cost variance? We are finding out the difference between standard cost and actual cost. You can find it out in two ways. Sometimes even ICS suggested answers will give only the total calculation. That is standard material cost minus actual material cost. Here you will get adverse because actual is more. Clear? Yes. Or else you can do individually also. That is this minus this minus this, then add up. I would suggest you when they have given more than one kind of raw material, do it individually and show the total like this. Show the total also. Don't miss it. You can just observe the presentation. Write the formula first. That is also very important thing. Sir, formula I have in my mind, sir. I will do only the calculation, sir. They will also give marks accordingly. Clear? They will cut the marks for sure. Please write the formula. And I suggest, guys, to avoid the shortcuts. See, even sometimes ICI in suggested answers, they will use AQ, SQ and all. But we don't know whether evaluator will accept it or not. Okay. To be safer from student angle, Please try to write full forms. I know it will take little extra time. That's okay. That's okay, guys. Oh, hope you understood. That is the material cost variance. What are we calculating here? The difference between the standard material cost and actual material cost. Got it? Next. Next, sir, if I divide the cost variance into two, we get usage variance and price variance. I discussed, we had a material cost variance that will be due to two reasons. Either you have used excess quantity or you have paid excess price. I discussed at the beginning. Yes, sir. Now, either you have used more raw material or you have paid more price. So that might be the reason for material cost variance. So let us find out that. What is the formula for this? Okay, first material cost variance let us discuss, which we have already finished. Standard cost of material for actual output minus actual cost of materials, which is nothing but how do I get standard cost, sir? Standard quantity into standard price minus actual quantity into actual price. And please be careful, guys. Standard quantity should always be for actual. Okay. And if there is any variance, it will be either due to price or usage. Now we have two formula for it: price and usage. Guys, come on. If there is a material price variance, we are finding out the difference between whom? Use a quantity na price. Price. So which price will come first? Standard price. So what is the formula? Standard price minus actual price. This is the extra cost we have paid for how much quantity? Actual quantity purchased. Actual quantity purchased. And who is responsible for purchasing that? Purchase department. So if there is any adverse price variance, that is material price variance, who is held responsible? Purchase department. You didn't negotiate properly. You didn't find a better supplier. So they are held responsible. Next is usage. Now usage, what do you use? Price or quantity now? Quantity. So we are finding out the difference between the quantity. So what is the formula, sir? Standard quantity for actual output minus actual quantity. And actual quantity here, which ones are used or consumed? Because you are using. There is a difference between purchased and used, na? Yes, I will explain that. Into standard. Who is responsible for using the raw material? Production department. So if there is any adverse usage variance, who is held responsible? Production department. Production department, because they are the one who is using the raw material. If there is excess usage of raw material, who should be held responsible? Production department. Got it? And sir, see guys, for price variance, we are supposed to use whatever we are purchasing. Whereas for usage, we should use what is used or consumed. Clear? Normally, they may not give separately. They will just give actual quantity. We will assume that quantity purchased is equal to quantity used. But if they have given opening stock and closing stock, then there is one question on illustration in ICM material about this. Clear? I have explained this even in my regular class. If there is opening stock and closing stock of raw material given, then purchase would be different, use would be different. But for academic purpose, in order to reconcile the variance, you use consume. You use consume. I have given a note here, you can see. It is always assumed that quantity purchased is equal to quantity used or consumed. Because if nothing is given in the question, we will assume. Until unless separately given in the question. Means in the question they have given purchase separately, consumed separately. Or else they have given the information about opening raw material and closing stock of raw material. In that case. If in the question both quantity purchased and quantity consumed is given, then use quantity consumed for variance calculations. Clear? Actually speaking, sir, here we should use purchased, here you should use used. Clear? But for academic purpose, we need to reconcile the variance also. Clear? If it has to tally and match, better use here also consumed, here also consumed. If they have given it separate. Sir, only they have given actual quantity in the question, sir. Assume purchased is equal to consumed. Whatever is purchased is consumed. Hope you got it. Yeah. So in simple, I repeat once again, because this should not lead to confusion for you. If by chance in the question they have given consumed and purchased separately, including the opening stock of raw material and closing stock of raw material, in the variance calculation, consider consumed. Consider consumed. Okay. And once you calculate the usage and price, guys, if you add up both, that should be equal to material cost variance. Only ensure that and then move forward. Only ensure that and then move forward. And easy to calculate also, guys. All this are once you know the logic and the formula, application is easy. Sir, use price variance. Standard price minus actual price. Okay, na? Into what? Actual quantities. Clear? Individually you calculate and add it up. And please be careful. One is favorable, one is adverse means. Please do the net. Okay, students always do add up and write on it. If one is favorable, one is adverse, one is negative, one is positive. So you have to do net adjust. That is where sometimes students will miss out. Yeah, they will be exceptionally good in advanced topics. Some simple things like this they will miss out. Yeah, so please don't give chance like that. Next, usage. Sir, what are we comparing? Quantity. So standard quantity minus actual quantity into standard price. Into standard price. Clear? You can see that. Next, coming to mix and yield variance. So usage variance is subdivided into mix and yield gas. Sir, when will this come as? Only when there are more than one kind of raw material used in the production process. Let's assume I am using three categories of raw material A, B, C. In the production, I was supposed to use 2:3:1 ratio. That is 2 kg of A, 3 kg of B, and 1 kg of C. Clear? But I have mismatched, sir. I have used more of C, sir, and less of B, sir. Something mismatch I have done. Because of that, will I get a variance? Yes. Because the cost of A, B, and C raw material will be different. So if you have made any mistake in the mix of using the raw materials, whatever variance you get is called material mix variance. Material mix variance. When do you get it? Only when there is more than one kind of raw material used in the production process. Sir, I am using only one raw material in my production process. Then this will not come. Then this will not come. Okay. Material mix variance. Sir, what is the formula for it? Revised standard quantity minus actual quantity used into standard price. Sir, what is this revised standard quantity? It is the total actual quantity which we need to break up in the ratio of standard quantity ratio. In the standard quantity ratio. So if I have to tell it in this question, we need to take this 10,700 and divide it in 4:6 ratio. 4:6 ratio. We get revised standard quantity. Simple. If this quantity was used in this ratio, what is that mix? Clear? Yes. And you will get this variance only if this mix and this mix is mismatching. You are supposed to use in 6:4 ratio, but you have used it in some other ratio. Only then you will get this mix variance. Got it? I repeat once again. Take the total actual quantity, divide it in standard quantity ratio. So I will show it. Revised standard quantity. You can see how 10,700. I have divided it between X and Y in 6:4 ratio. We will get the respective numbers. Take that here. Revised standard quantity minus actual quantity into standard price. Is that clear? Sir, instead of doing it separately here, can I add one extra column here also? Yes, that is fine. If you are comfortable, you can do that. Clear? Or else, please show the calculation. If you are not done here, please show it here. I have shown here. You can see. Revised standard quantity. And the last formula is yield variance. Yield variance. What is the formula, sir? Standard quantity minus revised standard quantity into standard price. Clear? Standard quantity and revised standard quantity I already explained. Deduct each other and multiply with standard price. You will calculate it for each raw material. Each raw material. You can see here. Each raw material. We have another way of calculating yield variance. See, using this formula, I calculated for each kind of raw material. One overall formula is there. What is it, sir? Total standard input. What is the total standard input? 10,000 minus total standard, I repeat, total standard input minus total actual input into average standard price. Into average standard price. Sir, how do I get average standard price? Standard cost divided by standard quantity. You will get 8.8. Clear? Yes, sir. So find out the difference between this. You will get 700 into 8.8. I have shown it here. You can see. This is the total standard quantity. This is the total actual quantity into average standard price. This is average standard price. How do I get average standard price? Standard cost divided by standard quantity. Clear? That means you will get overall. You can see it is matching. Same thing, it is matching. Yeah. So if you want to calculate individually for each element of raw material, do this. No, sir, I will calculate overall, then you can use this. Sir, which do you suggest us in the exam? Maybe this. If it is like MCQ question and all, you can use this. Tuck, 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 tuck calculation. Yeah. If not, better use this. Okay, sir. Fine, sir. Then coming to labor. Sir, in my example, where are you? My example. Ah. Sir, we found out the reason why 2 lakh. Now let us try to find out reason why 1 lakh. There will be two major reasons. What is it, guys? Two major reasons. What is it? Either you have worked for more hours or you have paid more wages to the workers. Clear? Yes, sir. And here also, guys, one more thing. If you add up both of this, you will get equal to usage variance. Just try to reconcile at the end. If it is not matching, that means somewhere you have gone wrong. Please quickly cross check. Clear? Yes. Yes. Now coming to labor cost variance. Sir, what is labor cost variance? Same like material. Guys, once you know material, labor is easy. Instead of quantity, here we will get hours. There it was like price or rate per unit. Here it is price or rate, or normally rate. We don't call it as price. Rate per hour. Rate per hour. So labor cost variance is nothing but standard labor cost minus actual labor cost. Then, sir, this will be due to two reasons. What are those? Efficiency, rate, or idle time. See, rate variance is how much we have paid. Guys, here itself, name itself is telling rate. So you are finding out the difference between what? Rate. Standard rate minus actual rate. And this you will pay for what? Actual hours spent. Actual hours spent. Okay, sir. Next, labor efficiency variance. Guys, efficiency can always be measured for actual hours work, the spent hour. Work. Productivity we will get for actual hours work. So this will always be for worked hours. So what is the formula, sir? Standard hours for actual output minus actual hours work into standard rate. Into standard rate. And sir, if there is any difference between spent and work, what do we call it as? Idle time. So we need to separately calculate idle time variance. So what is the formula? Idle time into standard rate. That's all. And it will always be adverse. It will always be adverse. So let us see now the formulas. Labor cost variance. What is the formula, sir? Standard hours for actual output into standard rate. What do we get? Standard labor cost minus actual hours into actual rate. And actual hours here means actual hours spent, because the payment will always be made for spent hours. Okay. That will give us actual labor cost. And actual labor cost, if it is more or less than standard labor cost, then we will get labor cost variance. And if there is labor cost variance, there will be two reasons for it, either the hours or the rate. Now let us calculate that. Labor rate variance. What is the formula, sir? Standard rate minus actual rate. And here rate means will always be per hour. Will always be per hour. So standard rate minus actual rate into payment is made for spent hours or worked hours? Spent. So spent. Very simple. Sir, I am spending 9 hours in my office, but I am working only for 7 hours. So productivity is for 7 hours or 9 hours? 7 hours. So efficiency is measured for 7 hours, whereas the payment is given for 9 hours. So labor rate variance, we need to take for spent or work spent, whereas efficiency is for worked hours, that is 7 hours. Yeah, there is a difference. Please be careful. Sir, actual hours, is it same? No, it will be different. That is only when there is ideal time. Okay. Labor rate variance, if it is adverse, guys, if it is adverse, who is responsible for it? HR department. Because you are the one who is negotiating with the workers, new workers. You should have negotiated a better price with them. Next, labor efficiency variance. Labor efficiency means, sir, efficiency is measured in terms of price or hours. Hours. So, what is the formula, sir? Standard hours for actual output minus actual hours worked into standard rate, because efficiency or productivity is given for hours work, not for hours spent. Okay, sir. So who is responsible? If by chance, if actual hours is more than the standard hours, who is responsible? Sir, the production manager. He didn't make the workers work, or the supervisor. Okay, there will be a supervisor now who will keep on telling, hey, work, why are you wasting time? He didn't do his job properly. He didn't do his job properly. Yes. So how do we calculate work hours, sir? Spent hours, or we call it as paid hours minus idle time. Idle time. And whenever there is idle time, while calculating the labor variances, always assume it is due to abnormal idle time. It is always due to abnormal idle time. Oh, yes. So if there is idle time, then we need to calculate that also. Idle hours into standard rate, and it will always be adverse, guys. Always be adverse. Okay, sir. And sir, what if by chance if there is no idle time? See, you will reconcile here. Labor cost variance is equal to labor rate plus labor idle time plus labor efficiency. If by chance if there is no idle time, then obviously hours spent is equal to hours worked. So straight away rate plus efficiency. That's all. Rate plus efficiency will give you a cost variance. If question is silent about idle hours, you don't assume something and take it. You assume there is no idle hours. You assume there is no idle hours. Okay. And I am telling you again, whenever they have given idle hours, please assume it to be due to abnormal reasons. So that is why we are doing a separate calculation for it. If it is due to normal reason, we ignore it. We ignore it. Okay. Fine, sir. So we got this. Or even idle time. Next, sir, efficiency variance can be subdivided into labor mix variance and yield variance. Very similar to material. Very similar to material. Guys, for material mix variance, what was the formula? Revised standard quantity minus actual quantity into standard price. Here, instead of quantity, bring hours. Standard hours minus actual hours. Hello, actual hours spent or work done. Guys, simple logic. For efficiency, you are using work done spent. Work. And these two are the subdivision of efficiency. So what should you use? Work. Common sense. Correct. You have to use work. So revised standard hours. Revised standard hours minus actual hours work into standard rate. Whereas here, standard hours for actual output minus revised standard hours into standard rate. Clear? Yes. Sure. Let us see. Labor mix variance or gang composition variance. Sir, when will this variance come? Guys, only when there are more than one category of workers used in the production process, like skilled, semi-skilled, unskilled. Sir, only if there are one category of workers working in the manufacturing process, then you will calculate only till here. Clear? Yes. So, for example, why is this mix variance? Sir, simple, guys. Let's listen. Sir, there are skilled, unskilled, and semi-skilled workers. To produce each and every unit, I was supposed to use 2 hours of skilled workers, 5 hours of unskilled workers, and 3 hours of semi-skilled workers, sir. This is what was standard proposition. But now I have mismatched this. I have used more of skilled. That means payment will be more, na? Clear? Yes. So that means I have missed out that mix. And gang, why are you calling it as gang? All these people put together gang. Boys gang irutal. Okay, or even girls gang will be there. Clear? So like that, sir, the group of workers is called gang. Correct, Tejaswini? Group of students is called gang. Same way, group of workers is called gang. So mixed variance, we also call it as gang composition variance. So if there is any mismatch of the hours of each category of workers, then we will have adverse mixed variance. Okay, sir. Now here, sir, what is the revised standard hours? Simple. Take the total actual hours worked, divide it in standard hours each. What do you divide? Total actual hours worked. Guys, here you will take this now. Same thing total you take. Divide it in standard hours each. Clear? Yes. So formula is revised standard hours minus actual hours worked into standard rate. Next coming to yield variance. Standard hours minus revised standard hours into standard rate. Here also we can use the alternate formula. What is that alternate formula I told you? Total standard hours minus total actual hours work into average standard rate. How do we get average standard rate, sir? Standard cost divided by standard hours. Got it? Yes. Let me also show it in the question, guys. Just a minute. You can see here. I'm just showing you how to apply it. First, always prepare a table like this. This will help you in variance calculation. This is standard data. This is actual data. Always ensure that standard is for actual. Even here, they are given the standard data for 1 unit. 1 unit they are given in this. They are given for 1 unit of output. Convert it for actual output of 10,000. Okay, we have done it here. We have done it. Okay. Once we have got standard hours, multiply that with standard rate, we will get standard cost. Same way, actual hours spent would be given in the question. Clear? That is paid hours. This is the hours for which payment is made. Multiply that with rate, you will get actual cost. Clear? And when you are calculating the labor cost variance, you should always straight away deduct each other. Sir, standard cost minus actual cost for each of them. Clear? Or else you can do it total also. Standard cost minus actual cost. I suggest you to do individually and then show the total. Yeah. Then coming to rate. Sir, standard rate minus actual rate into what? Actual hours spent. Spent. Clear? Yes, sir. Same way we have to do for all three and do the total. You can see here. And here we are taking spent. Please be careful. Next, coming to efficiency variance. For efficiency variance, we need work. So in the question, if they have given any information about idle time, deduct idle time from hours spent, guys. What do you get, sir? Actual hours work. We have got actual hours work. Clear? If possible, if you have space, you can add one more column here. Actually, two more. One is for idle time, the other one is for actual hours work. Hey, two column extra you have to add. One is idle time, the other one is actual hours work. Sir, no space, sir. Then better present lines. Then better present line. This even revised standard hours will come for that one additional column. So if you don't have so much space, better present it separately. Hope you understand. Please calculate this separately. Normally, this will not be given directly. Okay, sir. Then, so for efficiency, we use that. For efficiency, we use it. What is it, sir? Standard hours minus actual hours work into standard rate. And anything which comes under efficiency will always be for work. Okay. Then also calculate idle time variance. Idle hours into standard rate. And it will always be adverse. Normally, guys, while calculating the variance, if you get positive answer, favorable, negative answer, adverse. But for this, don't go for, sir, positive answer I got, sir. Multiplication, no negative symbol at all. So I will write favorable. No. Idle time is always a curse for a company. Clear? Because they are incurring the expenditure for the product output, which they have not got. No productivity, but still payment is happening. Okay, sir. Now you add up all these three guys. Idle, efficiency, and rate. Cross check whether it is matching cost variance. Clear? Only in totals you can check. Don't check it individually and all. Better check it in total. Just plus this. Everything is adverse. Is it equal to cost each? Clear? Only then you proceed further. If not, somewhere something has gone wrong, please cross check quickly. Then coming to mix and yield. Mix we need to calculate. Revised standard hours. Guys, how is it? Take this. Actual hours work total. Divide it in this ratio. 2:3:5. Total actual hours work in standard hours ratio. Standard hours ratio. Let me just show it. You can see. This is the total actual hours divided in standard hours ratio. Standard hours is simplified here. And ensure that total you will get same 1,07,000. Then you will also calculate yield variance, which is standard hours minus revised standard hours into standard rate. Once the data is ready now, just placing them. Apply the formula, place them. That's all. Tuck, 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 tuck. And don't take too much time for it. Yeah. And see, if you can do this calculation without calculator, do it. But if you're not confident, better use calculator. Yeah, because instead of writing favorable, you will write adverse. Instead of writing adverse, you will write favorable. So all that confusion don't want. Okay. So when you're doing, please follow the same order in the calculator also. So if you get positive answer, favorable. Negative answer, adverse. Ashya. Then for this, we have alternate formula also. I told you. What is it, sir? Total standard hours, which is 1 lakh. Take it here. I have done it here. Minus total actual hours work, 1,07,000. Into average standard rate. How is it, sir? 3,90,000 divided by 1 lakh. We will get 3.9. Okay, now, so this is nothing but the total yield variance. Fine, sir. So clarification I have given. If any information in the question is relating to standard is given for other level of output, We call it a standard quantity because sometimes standard data might be given for 100 units, but actual output is for 1000. So divided by 100 into 1000. That is always convert the standard quantity as well as standard hours for actual output price. Now coming to overhead variance. Guys, whatever we discussed, material and labor will always be direct in nature. Whatever material variance and labor variance we discussed, that is with respect to direct. All indirect expenses will come under overhead. And overhead we will subdivide it to variable and fixed. But before we learn the overhead variances, sir, we should know how to calculate few rates. How is it, sir? Simple. Guys, I will try to explain with this example. Here they will use the word budgeted and all. So please be careful. Listen, guys. They will give budgeted data, actual data. Budgeted is nothing but your target, which they have set at the beginning of the period. Actual is what you have achieved, what you have exceeded. Okay. Chalo. Production, 1000. We call it as budgeted output. This is actual output. Then labor hours, budgeted hours, actual hours. Then overhead cost, budgeted overhead cost, actual overhead cost. Oh. Now you need to do some calculations, guys. I have just taken overall here. I am not divided variable, fixed and all, but same calculation for variable as well as fixed. You need to calculate the variances separately, but I have just taken overhead here just to explain you the concept. Sir, how do we calculate? For example, here, standard overhead rate per unit, 10 lakh divided by 1000. That is nothing but budgeted overhead cost divided by budgeted output. Divided by budgeted output, you will get 1000. Same way, sir, actual cost per unit. It is 8 lakh divided by 800. 1000 rupees. Got it? Then coming to, sir, standard overhead rate per hour, sir. 10 lakh divided by 8000. Which we call it as budgeted overhead divided by budget hours. You will get per hour. Per hour output. Same way, sir, I want to calculate actual overhead rate per hour. How do we calculate it, sir? Actual overhead divided by actual labor hours. Got it. Hope you understand. Especially the standard calculations we need to do. Standard overhead rate per unit, per hour calculations and all we need to do because this will help us in our variance calculation. Now, guys, when we are observing the overheads and all, it will always be based on standards. So here what they have given is not standard hours, it is budgeted hours. Sir, what is the difference between budgeted and standard? Guys, budgeted hours will always be for budgeted output. Whereas standard hours, we need to convert it for actual output. Sir, how is it? Simple. You can see standard hours for actual output. Sir, 8000 is for 1000 units. How much for 800 units? How much for 800 units, guys? Is that clear? So if you divide 8000 by 1000, how much you get? 8. Correct? Into 800. You will get 6400. What do we call this as? Standard hours. Standard hours is different, budgeted hours is different. I repeat once again. Budgeted hours is always for budgeted output. Whereas standard hours, we need to convert it for actual output. How is it, sir? Simple. 8000 is for 1000 units. How much for 800 units? That means to produce 800 units, how many hours you were supposed to take? You were supposed to take. Hope you understood, guys. Here budgeted is different, standard is different. Means with respect to hours. Now we will observe the overheads for each and every unit produced because we would have fixed predetermined overhead rate. Correct? This is the predetermined overhead rate, guys. This is per unit per hour. Now, what is the standard hours? 6400. How much overhead we have observed? For each unit 125 into 125, 8 lakhs. Or else we can go with units also. Observe. For each unit we produce, how much overhead we will absorb? 1000 rupees. How many units we have produced? 800. So 800 into 1000 will give us overhead absorbed. This is nothing but overhead absorbed, guys. 8 lakh, 8 lakh. You will get same. You can calculate it based on hours or output. Hours means it should always be for actual output. What hours? Standard hours. How much is my standard hours? 6400. For each hour we work, what is the overhead we should observe? 125. So 6400 into 125. How much do you get? 8 lakh. We call it as overhead absorbed. Clear? Then, sir, can I calculate in another way? Yes. What is the overhead rate per unit? Predetermined overhead rate. We discussed in overhead chapter also, na? Yes, this is nothing but predetermined overhead rate fixed based on budgeted. Yes, sir. For each and every unit I produce, how much will I absorb? 1000 rupees. How many units I have produced? 800. So how much I would have totally observed? 1000 into 800, which is 8. Either way you can do, you will get same. Yeah, but please be careful when you are multiplying here, that is the rate per hour. Take standard hours. Standard hours. This is what you were supposed to take to produce 800 units. Hope you understood. So these are some basic calculations which you have to keep it ready first. Then you apply the formulas and calculate the variances. So I have given here, you can see. Standard overhead rate per unit. How do you calculate? Budgeted overhead divided by budgeted hour. Then standard overhead rate per hour, how do you calculate? Budgeted overhead divided by budgeted hours. How do you calculate standard hours for actual output? Budgeted hours is for budgeted output. How much for actual output? How much for actual output? Then standard output for actual hours. Budgeted output is for budgeted hours. How much for actual hours? Okay, especially these three are important calculations. Got it? Yes. Budgeted hours will be for budgeted output, where standard hours will be always be for actual output. Clear? So means budgeted hours only, we will convert it for actual output. What do we call that hours as? Standard hours. When I convert my budgeted hours for actual output, we get standard hours for actual output, like how we did for labor calculation. Oh, variable overhead variances. Now, the overhead is classified into two. It can be variable or it can be fixed. Sir, what about material and labor? Whatever we discussed, I already told it is direct. When it is direct, it is always variable in nature. Okay, sir. Variable overheads consist of expenses other than direct material and direct labor, which vary with the level of production. Any cost other than direct material and direct labor, which will vary with the output or level of production, we put it under what? Variable overhead. Means it will vary with the production, means higher the production, higher will be the cost. Lower the production, lower will be the cost. Like that. Okay. If the way, and I am not telling it is direct in nature. Any overhead obviously it will be indirect in nature. Is it directly attributable to my product? Can I tell for each and every unit how much I am incurring? Maybe not. But is it varying with my production? Yes. So we call it as variable overhead. If variable overhead consists of like indirect materials, then in this case it varies with direct material used. On the other hand, if variable overhead is depending on the number of hours worked, then in this case, it will vary with labor hours or machine hours. So if nothing is mentioned in the question, we will assume it based on labor hours or machine hours. So variable overhead variance is classified into two: variable overhead expenditure variance and efficiency variance. First of all, how do we get variable overhead cost variance? Variable overhead cost variance. What is the formula? Standard variable overhead for actual output minus actual variable overhead incurred. This is nothing but whatever actual cost is incurred. And please be careful, guys. Here we are doing only variable calculation. There will be a fixed calculation separately. Yeah, yes. Variable overhead cost variance calculation is very similar to labor cost variance. What was the formula, sir? Standard labor cost minus actual labor cost. Now here also, how do I get this, sir? Standard variable overhead for actual output. How do I get? Simple. Whatever is the standard variable overhead rate per hour, multiply that with standard hours. Multiply that with standard hours. You get the standard variable overhead for actual output. Or else standard variable overhead rate per unit, multiply it with actual output. You get this. Got it? Next, we will subdivide this into expenditure and efficiency. Guys, very similar to labor variance. In labor, we had labor rate variance. Now, what was the formula for it? Standard rate minus actual rate into actual hours spent. Actual hours spent. Correct? But here we will always take work. So what is the formula, sir? Standard variable overhead rate per unit, per hour, minus actual variable overhead rate per hour into actual hours worked. Here it should be actual hours worked. Clear? Yes. Same way. I have given similar to labor rate variance. Next one, variable overhead efficiency variance. Very similar to labor efficiency variance. What is the formula for labor efficiency variance, guys? Standard hours for actual output minus actual hours work into standard rate. Here also same to same formula, but instead of writing only standard rate, we need to write standard variable overhead rate per. Here are same to same formula. Standard hours minus actual hours work into standard variable overhead rate per hour. Sir, how is this calculation? Let me quickly show it. Just a minute. See here, when it is overhead variances, guys, you can get three kind of question. One question only on variable overhead variance. The other question is only on fixed overhead variance, or else they may combine both and ask one single question. Yeah, yes. So in the class, actually, I have done all three types. Individually for variable, individually for fixed, one combined question. I'm going with that one combined question. Guys, budgeted data is given, actual data is given. Now, first we will focus on variable part. First we will focus on variable part. Sir, first standard variable overhead rate per unit per hour we need to calculate. How is it? Takes budgeted variable overhead divided by budgeted output. You will get the standard variable overhead rate per unit. 30. Same way. Sir, per hour I need. How do you do? 1,20,000 divided by 8,000 hours. Here machine hours is given. So you will get 15 rupees per hour. Standard variable rate per hour. Then we also should calculate standard hours for actual output. Sir, budgeted hours is for budgeted output. How much for actual output? We get standard hours 7,600. Then even actual variable overhead rate per hour is calculated, which is nothing but actual variable overhead divided by actual hours. Divided by actual hours. Okay, now translate the values in the formula. Overhead, variable overhead cost variance. What is the formula, sir? Standard variable overhead for actual output. How do we get it? Standard hours into standard rate per hour. Or else, you can also do it in another way. How is it, sir? Actual output 3,800 into the rate per unit 30. I have done it here. I have shown it. Actual output into rate per unit. Or else, standard hours into rate per hour. Both will give you same. Minus actual overhead. Minus actual overhead. Oh, you will get same answer. This is just an alternate calculation. I have not done two different calculations. Yes, sir. Next, expenditure variance. Standard rate per hour is how much? 15. Minus actual rate per hour, 15.38. 15.38 into actual hours. Guys, as we have got decimal here. If you want to avoid the difference, then better take as it is. If I want to avoid the difference, then take this. You can see I have considered the same. 120 divided by 7,800. Because if I take 15.38, which is a decimal, you might get some difference. If you are reconciling, it will not. So in order to avoid the difference, you can do it. Sir, when I do this calculation, how will I do it in calculator, sir? Simple. You do 15 into 7,800 minus 120 divided by 7,800 into 7,800, which will give you 121. Clear? Hope you understood. 15 into 7,800, you will get 1,17,000. Here, cancel this out. You will get 120. Take as it is. So 3,000 others. By doing this, we are avoiding the difference. We are avoiding the difference, guys. Nothing wrong even if you take 15.38 here, but you will get some minor difference. Okay. Then efficiency variance. Standard hours minus actual hours into standard rate per hour. So everything is already ready. Just start. Clear? So 3,000 adverse, 3,000 adverse should be equal to 6,000 adverse. Matching, sir. Matching is okay. Let us move forward. And guys, till now, whatever we have discussed, all the variances which is having positive, favorable, which is having negative, adverse. Until now, whatever we have discussed, standard always first, actual next. Clear? Whereas under fixed, in two places it will change. Clear? Yes. Fixed overhead variances. Fixed overhead represents all items of expenditure, all items of expenditure all items of expenditure which are more or less remain constant irrespective of the level of output. Sir, how much ever the level of output changes, the cost will remain same, sir. We call them fixed overhead. So fixed overhead cost variance can be divided into fixed overhead volume variance and expenditure variance. And volume can be subdivided into three, which is efficiency, capacity, and calendar. And when there is calendar, we will we will calculate the revised capacity variance. Okay, if there is no calendar, then we will calculate only two. If there is calendar, then we will calculate capacity also, but that is revised capacity. Revised capacity. And when do we calculate calendar variances? Only when they have given the number of days information in the question, like budgeted days and actual days. Oh, pay attention. Fixed overhead cost variance. Fixed overhead cost variance is the difference between the actual fixed overhead and observed fixed overhead. Guys, in overhead chapter, we used to calculate under absorption, over absorption. Nothing but that only. Here, they are not calling it as under absorption, over absorption. They are calling it as variance. There also it was difference only, people. Overhead observed minus actual. The difference is to be under absorption or over absorption. Here also same to same we are calculating, but they are naming it as overhead. Sorry, variance. They are naming it as variance. Chalo. What is the formula for fixed overhead cost variance? Observed fixed overhead minus actual fixed overhead. Sir, how do we calculate the observed fixed overhead? Recall your overhead knowledge. We will first fix predetermined overhead rate and assume it is per unit 100 rupees. For each and every unit we produce, how much we will be observing? 100 rupees. Correct? Yes. So, observed can be calculated in two ways. I have written the equation here. You can also write the RMR. Observed fixed overhead is equal to Chinmay. Right? Put the RMR. Manjunath done? Observed fixed overhead is equal to standard hours per actual output. How do we get standard hours? How do we get standard hours? Budgeted hours divided by budgeted output into actual output. Yes. Standard hours for actual output into standard fixed overhead rate per hour. How do we get this? Budgeted fixed overhead divided by budgeted hours. Oh, we'll get standard rate per hour. Or else the other way one is observed fixed overhead is equal to actual output into standard rate per unit. Please be careful. If this is the output, here you have to take rate per unit. If this is hours, then you have to take per hour. Both the ways you will get same answer. Both the ways you will get the same answer. Okay, sir. Then fixed overhead expenditure variance. What is the formula, sir? Budgeted minus actual. What is budgeted? They would be given in the question. Budgeted overhead will always be for budgeted output. Take as it is. Take as it is. Sir, what is the difference between budgeted and observed? Guys, observed, I have converted the budgeted data for what? Actual output. Clear? Means if predetermined overhead rate was observed for actual output, how much it would have been? Clear? Whereas budgeted will always be for budgeted output. Budgeted fixed overhead will always be for budgeted output. Whereas actual is for always actual. Actually, what is clear? Sir, how come, sir? Confusing terms. Listen, listen. There is a difference between all three. Observed means if I am following the standard rate to observe on actual output, how much will I get? Clear now? Standard rate I am following to observe for what? Actual output. How much do I get? Whereas budgeted is budgeted cost for budgeted output. Whereas actual is actual for actual output. Actually, how much you have? Clear? Yes. So this is like a mix of both. Rate is standard, but output is actual. Whereas this is both budgeted. Whereas this is both actual. So this is like a combination of both. Observe. Clear? Right? Yes. Sure. So fixed overhead expenditure variance. What is the formula? Budgeted fixed overhead minus actual fixed overhead. Whereas overhead volume variance. What is the formula, sir? Observed minus budget. Observed minus budget. There is a chance of that you might get confused. So please be careful, guys. Here observed minus observed. A minus A. Yeah. Whereas here B minus A. That is budgeted minus actual. Whereas last one, that is volume. It is A minus B. A minus B. Okay, sir. Next. Oh, first, let me discuss this with the question. Sir, coming to fixed data. How can we calculate fixed overhead rate per unit and per hour rate? Guys, simple. We have fixed budgeted overhead divided by budgeted hours. You will get standard fixed overhead per hour. If you divide 4 lakh by budgeted output of 4,000 units, you will get standard fixed overhead rate per unit. Got it? Yes, sir. Don't assume the variable and fixed rate per unit per hour will be same, Anta. It will be different. You can just observe in this question only. Yes. So we have got per unit 100, per hour 50. Let us see. Fixed overhead cost variance mass. Observed fixed overhead. How do we calculate it, sir? If I observe based on hours, 50 hours in, sorry, 50 rupees into standard hours. Standard hours, how much? 7,600. Hours data will remain same for both fixed and variable. Yes. Sir, what if I use output data? Then per unit. Per unit into actual output. 3,800. You will get same. You will get same. Minus actual fixed overhead. You are getting 10,000 adverse. Next, fixed overhead expenditure variance. Budgeted, which is given in the question for budgeted output only. Minus actual. Both will be given in the question. Don't worry. Both will be given. This minus this. That's all. Budgeted minus actual. Then volume variance. Observed minus budget. Observed minus budget. Okay, observed we already calculated minus budget. Just cross check, is it matching? 20,000 favorable and 10,000, sorry, 20,000 adverse, 10,000 favorable. You will get 10,000 adverse net. Sir, is it equal? Yes. Only then proceed further. Only then proceed further. Okay, let us now proceed further. Fixed overhead efficiency variance, similar to labor efficiency variance. What is the formula, sir? Standard hours for actual output minus actual hours, that is nothing but work, into standard fixed overhead rate per hour. Guys, one thing you keep, whenever you are finding out the difference between hours, even the rate should be per hour. Okay, sir. Efficiency variance. Next, coming to capacity variance. Guys, these two formulas are different. Please be careful. Till now, wherever we have calculated the variance, we have always taken standard first, then actual. Okay, for all the variants. Whereas here for this, it was a bit different. Whereas for all other variances, it was always standard minus actual. Positive means favorable, negative means adverse. Clear? Now we are thinking from capacity utilization point of view. Now, guys, assume my capacity was to budgeted hours to work for 100 hours, but I worked only for 80 hours. Good or bad? With respect to capacity utilization, bad. We have underutilized the capacity. You have underutilized the capacity. Clear? So, will you have positive or adverse variance? Adverse variance. Or else, assume my budgeted hours is 100, but I work for 110. I use the capacity to the best. Overutilization. Clear? So, will you have positive or adverse now? Positive. Clear? So that is why the position is interchanged. When it comes to capacity, guys, if actual is more, good. If actual is less, bad. If actual is less, that means what, sir? We have underutilized the capacity. Guys, here we are not thinking from cost point of view. We are thinking from what point of view? Capacity utilization point of view. Sure, should actual be more or less? Sir, it should be more, sir. It should be more. Okay, so actual hours minus budgeted hours into standard rate per hour. Clear? So please be careful here. The positions have changed. We are taking actual first, then budgeted. Then coming to fixed overhead calendar variance. Sir, here also we are talking with respect to the our days worked. Now assume I was supposed to work for 30 days. I have worked only for 29 days. Good or bad? Bad. I have worked one day less. That means one day's productivity we have lost. Yes, adverse variance. Same way. Assume guys, I was supposed to work for 25 days, but I worked for 27 days. Good. You have produced more. Good. See, obviously, if I have worked more, cost is more. But here we are not thinking from cost point of view. Did we work more or not? Did we use the capacity more or not? We are thinking from that point of view. Clear? So here also, if actual days worked is more than budgeted, it is always good. So we are taking actual first minus budgeted. Guys, what is the formula? Calendar variance. Actual days minus budgeted days. You will get the difference in days or hours or days. So rate should be per day. Per day. Sir, how do we get it? Simple. How do we get the rate per day? Simple. Listen here. Budgeted fixed overhead divided by budgeted days. Budgeted fixed overhead divided by budgeted days. That is the standard fixed overhead rate per day. See, by mistake, student might take here per hour, guys. Please don't do that. You are finding out the difference between days, not per hour. So even the rate should be per day. Per day. Hope you got it. Yes. And whenever you get confused with this, sir, should I take actual first or budgeted first? Just see, should actual be more or less? If actual is more with respect to capacity and work days, it's always good. So take actual first. If actual is more, it is favorable. It is favorable. Okay. And whenever we calculate calendar variance, then instead of calculating capacity variance, we need to calculate revised capacity variance. Revised capacity variance. Sir, what is the formula? See, same thing, capacity, but this will change. What is it, sir? Actual hours minus revised budgeted hours into standard fixed overhead rate per hour. Sir, how do we get revised budgeted hours? Budgeted hours is for budgeted days into actual days. Means in simple, budgeted hours we are converting for actual days, sir. So let me show it here. How do we calculate it, sir? Simple, simple. Listen. Budgeted hours divided by budgeted days into actual days. Into actual days. So you can see, I will show the calculation. In this question, calendar variance is there. Okay, that is actual minus budgeted into standard rate per day. So we are calculating capacity as revised capacity. So what is the formula, sir? Actual hours minus revised budgeted hours into standard rate per hour. So how do we get the revised budgeted hours? 8,000 budgeted hours divided by budgeted days into actual days. Into actual days, guys. Okay, fine. General note at the end. What is that general note, sir? Whenever just a minute. Yes. Whenever the variance is positive, then it is known as favorable variance. And when the variance is negative, we call it as unfavorable variance. But ideal time variance will always be adverse. Will always be adverse. And unfavorable and adverse is one and the same. Yes. Unfavorable is otherwise called as adverse. Fine. So we are done with discussing the standard costing. To the extent possible in this short period, I have tried to explain you each and everything. But if you have already attended the regular class, you will be knowing each and every formula. I have gone in detail and I would have explained you guys. Because this formula should not be mug up. You need to understand what you are calculating. Accordingly, you can only derive the formulas. Okay, which is very, very important. Because if you try to mug up and if you try to keep it in your mind, you cannot retain it for a long period. So this is all about standard cost.